Hello, traders. Welcome back to another episode of the Forex Pipeline. I am BFX, and today I bring to you one of the most educative content you can find on the social media space. So today we are going to discuss about one of our major pairs, which is the GBP. Today I'm going to discuss about GBP USD, Euro USD, um, gold. We're gonna analyze them together. We're gonna analyze the market together. We're gonna talk about GBP, GPY. GPY pairs are actually trending at the moment. They are heavily trending at the moment. So I think we should also talk about them and talk about how we can take advantage of moves in the market. So today, before me and you right now, I have GBP USD. Now, as we all know that GBP USD has been on a pullback, which is um a bullish movement. As you can see, higher highs and higher lows, higher highs and higher lows, and the market has pretty been bullish for a while now. It has been bullish for a while now. We have been just on this uptrend right here. So now, first things first, what do you want to do when you open your chart like this? When you have a blank chart like this, you want to come to your higher time frame and analyze and look at what the market is doing. And this is the most recent move of the market right here. This is the most recent move of the market because why? The market pulled up to this level, dropped down, pulled again, dropped down, pulled again, and then dropped down. Now, obviously, we are on an uptrend now. Ideally, this is the level we should be expecting market to what to pull into. This level right here. This is the level we should expect our market to pull into. Why? Because we expect market to what take out this high because liquidity is resting above this high right here. Liquidity is resting here, and we should all know that the market uses what liquidity for each and every movement. Now, you want to plot your support and resistance level, and if you want to learn how to plot those levels like a pro, do well towards to message me for mentorship. Now, before us right here, like I said, we have the GPUSD. Now, like want to identify what's the most current trend of the market. Now, basically, this market is on an uptrend, and the market has what giving us a low, a high, because this is the recent movement. As you can clearly see, this is kind of like we are in a range because we have been trading in this low and we haven't taken out this high right here. So we have been in this range. We have been in this range. We have obviously been. Let me just take this out so that we take this out. So basically, we have been in this range. This is the range we have been in. Yeah, because why the market has not break above and the market has not break below this range. So and technically in this range that we are in right now, the market is what is pushing to the upside right here. It is pushing to the upside. We are in a range, yes, but the market is what is pulling all the way to the upside. Now, as we all know that okay, the market is trying to get to this level right here. What do we want to do? After any pullback, we want to do we want to take advantage of every buy that is going to what's happen. Now, as we can see, the market has pulled back very pretty much nicely. Now, initially, as at last week, I was expecting the market to tap into the neckline of this inverse head and shoulder and give us a buy confirmation, but somewhere around this level right here, which I was patiently waiting for the market to give me confirmations. I was actually expecting something like this to happen, but sadly the market just did what it wanted to do. The market came to this purple bar right here. Let me remove all these purple lines so that you won't be confused. The market came all the way right here and then begin to sell off all the way to this level. Now, one thing you must know that in the market, always wait for what? For important level to be taken out before you should take your trades. Now, when I scale down to my lower time frame, let me scale down to lower time frame so that you will see the reason why I initially refused to take that trade. Now, I was actually waiting for the market to do Can I even remember where that turnaround happened? Um, it was kind of like a W pattern. I think this should be it. So I was waiting for this level to be what to be taken out. Now, this is what happened when the market had tapped into this neckline right here, which I initially showed you on the higher time frame. I was expecting the market to what to do something like this. Now, this is a W pattern. There was a W pattern right here that formed, and for me to say, okay, this W pattern is valid, I want to see something like this. It pull back into this level, and then candlestick reactions like so around here like this. Candlestick reactions that this is signifying like buy signals, then that is when I want to be what I want to be taking my what entries. I want to be taking my entries. So none of that happened. Now, which is that is why it's always good for you to react to what the market is giving you, not you telling the market what to do. Now, obviously, as it didn't happen, the market sold off all the way to this what to this demand zone right here because this is a demand zone. Yes, the market sold all the way to this. Sorry, this is a supply zone. Sorry, the market sold all the way to this supply zone right here, or demand zone, or let's just say support. So basically, we sold off to that level, and right now we are already seeing some kind of a reversal pattern to the upside, but we are not still sure. So let's continue with our breakdown of the market. Now, this is a what, as we can clearly see, this is a what, a high, a lower high, a higher high, a lower high, a higher high, a lower high. What should we expect? We should in turn expect a what? A higher high that will tap into the high I showed you that I'm expecting the market to attack, as you can see. So this market moves in a very systematic form. So as you can see on my chart right here, this is what obviously I should be expecting to see in the market. Now, what do you want to do as a trader? Now, the where the market is now is a level where you should be entering your trade. Now, all this crash that happened all the way right here, I didn't take. I don't think I took a sell setup on this trade. I only took, I think, a buy. I took a buy kind of in between this level, but it was a very small time frame buy. So I took a buy in this trade, but I did not see any sell setup right here because even this reversal that happened, this was not a, it was a pullback. Even this pullback that happened right here, it did not actually give me the kind of pattern I want to see because this is not a reversal or kind of pattern for me. Because if the market wants to reverse, I want to see something like this. I want to see something like this, either something like this. Yes, I want something like this for a reversal, or I want to see, or I want to see something. I want to see sorry about that. I want to see an M pattern like this. Correct. Then I'll say, okay, this is a what? This is a what, a signal for me to buy at the neckline of this M pattern. Now these are what I want to be seeing. Yeah, these are what I want to be seeing before I'll be taking decision. So here it actually formed the left shoulder, but it failed to form the right shoulder right here. It actually failed to form the right shoulder. Better still, the market took out this place and then started to just the sell momentum was too much and the sale just continued like that. So whenever I don't understand it in the market, please do well to leave it. Now, quick one. As I've already showed you guys, what should we be anticipating right here? We should be anticipating the market to pull all the way to this high. This should be your first level target, this high. Now, if market breaks this high, then you can expect the market to come all the way to this high. Now, what will I expect as a typical out of experience? I'm expecting the market to do something like this, maybe pull all the way up, take out these two highs, and then crash. This is what I should be expecting. Yes, because this market, as we all know, this market is overall bearish. Yes, the market is overall bearish from the monthly time frame. As you can see, the market has been on a downtrend ever since. It has been on a what, on a serious downtrend. So I won't be surprised if I see the market takes out those high and then sell off. But if that doesn't happen, then we will be targeting this support zone right here. So as you can see, the market gives you room to be able to decide whether not to take a decision. So if the market takes out this level, it depends on what the market wants to do. If it gives strong sell signals, fine, we'll buy. How are we going to do? How are we going to know strong sell signals? Like right here now, this market give a shooting star right here. This is a shooting star that caused all these red sales that we are seeing right here. All the sales that are happening right here. Was this shooting star that caused it. And if you can still look again, this is a bullish engulfing candle right here. After this bullish engulfing candle here, it caused all the buy all the way to this level. So the market moves in a very, 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 very orderly manner. So you have to just learn to understand that. And once you can be able to decipher that, it won't be difficult for you to make trading decisions in the market. Now, we're just talking about GBP USD, GBP USD. Let's scale down to smaller time frames. Oh, my network is delaying. I don't know what's going on. What's happening? All right. So from our 4 hour right here, from our 4 hour time frame right here, um we can clearly see that we have been on a sweet downtrend like this, like so nicely all the way. We have been on a downtrend. Now, when do you want to be expecting buys? Where do you want to see? What do you want to see before you expect buys? You want to see, I'm a trend trader. I trade only the trend. I don't like trading ranges. I trade trends, I trade reversals, but I don't trade ranges. So basically, you want to see something like this, a pull up, a pull back to this level like so, and then a continuation. Now, this is where we want to be taking our entries from. This level should be where we want to be taking our entries from if this should happen. But if this does not happen, we still stay bearish because we have to see the market take out this trend line and give us buy reactions before we can call the market buy. And hopefully, I'll be expecting the market to break this trend line anytime soon. Anytime soon, this trend line will be taken out because the market has sold off for a very long time and it has not get to the level where it is supposed to get. Now, the only time I will begin to call this market a short is when this market comes like this. Let me just give you what when we can call a short. So long as we are above this low right here, we are technically bullish. But the moment we take out this low like this, now understand that there are two types of, will I say, when a low and a high is being taken out, there are two types. Now there is a one that signifies reversal, and there is a one that signifies liquidity grab. Now you should be able to decipher which represents which. Now, liquidity grab, the market will come like this with a full-fledged candle and then it will leave a wick. Now that is liquidity grab. That is just to induce people that say, okay, this is a support level. If they sell from the this is a support level, and once the market breaks a support level, you should expect a sell to happen. But that sell that you're expecting to happen, the market will just manipulate that level and then tap into orders, tap into sell and buy orders, stop out traders that even place buy and sell trade. And that is why it's not good for you to buy at support or say it's not good for you to buy at support or sell at resistance. Always is for the market to tap into support, fake out traders, take out whoever wants to take out, and then join the market when the move has started. That is the best time for you to take your trade. When the market is already moving, that is when you should just look for a nice pullback and enter, execute. You see the market will go straight to your TP without stress. Now, once you see the market just come down, gives a wick, and then close above this low, you should know that the market just grab your liquidity and grab orders for it to continue this push all the way to the upside. Now you must understand that this market, it needs liquidity to move, and if there's not enough liquidity for the market to push, it has to sort for liquidities before it will push. And it is those newbie traders and retail traders that that actually don't understand the market, that the market always use their stop losses as liquidity. So basically, if the market does not take out this trend line right here and give us the reaction we want to see, I'll be expecting either a sell to this liquidity area and then a buy. The market will take out this low right here because as you can see, this is a very, very strong support level. Why? Because the market gave a triple top formation at this level before this buy happened. It gave a triple top formation at this level before this buy happened. And market has come back into that zone, which is here, and it has tapped into it. Immediately the market tapped into it, you can see the reactions right here. This is a very strong support zone. Let me use my I didn't use my rectangle because I can spot them. So, but for the sake of newbie traders, this is a very, very what strong support level. This is a strong support level. So I know that this is a very strong support level, and I expect that each time market comes into it, I should expect the market to reverse. Now, this is not the only confluence I'll use to enter the trade. I have to see other confirmations too for me to enter the trade also. So if you want to learn how to do that, just you know what to do. Kindly use the message button and message me. So basically, this market has what tapped into a very strong support zone, and we are expecting a reversal to the upside. Now, I was explaining something before I just digressed. So the only time we'll call this market bearish is when this market do something like this, break out, come back like this, and then begin to play around this level, play around this level, play around this level, and then begin to sell off. That is when we are going to say, oh, GBP USD is now what bearish because it has altered the trend. Apart from altering the trend, there's a trend line also. It has been taken out, stuff like that. But the only time we can call for that is only when this low this low right here has been taken out and we see reactions like this. Then we want to be joining the market in all these small pullbacks. That's when we want to be joining the market. When these smaller pullbacks will be happening, should be when we want to be selling the market all the way to this next level right here, all the way to the next level, which is this purple bar right here. So that is that about GBP USD. So technically we are bullish on GBP USD. We are bullish on GBP USD technically. Once we take out this trend line right here, we should be expecting the market to buy all the way to the upside. This is what basically I want to see. I want to see the market pull out, pull back, and then boom to the upside. So this is what I want to see. And then once I see these breakouts and retest, and I really want to jump into the trade. Yeah. So that's that about GBP USD. Now let me go to gold. Yeah, gold has actually been giving some nice moves lately. Excuse me. Let me go to gold. So basically, let me take out all these symbols here of my analysis. Let me take them out. Now, guys, as you can look at my gold chart right here, you can see this is a strong key level. This key level, I drew this key level as at May. And currently, we are in what? August. Just May, June, July, August. I drew this key level as at May. That was when I drew this key level. And you can see how the market has been respecting this level for the long. Like, look at it. Just even from here. Normally, I'm even supposed to extend it all the way here. But just look at it. The market pulled here, tapped in, pull back, tapped it, pull back, went up, broke it, came back, tap into it, sold off, came back, tap into it, sold off, came back, came out, broke it, tapped it, retested it, broke, went to the upside, still came back again to still tap into it, and then pushed up, came back to tap it. Now, basically, I don't know why gold is doing that, but to me, this is not the kind of chart I want to be trading. Yes, because it is very, very manipulative. Maybe you might think we are buying the market to sell. You might think we are selling the market to buy. This kind of price action, I actually don't like to trade it. I'm more of a like trend trader. And right here, I can't obviously see a trend right here. I can't obviously see a trend. Even if I'm supposed to take advantage of this move, These are maybe I will just take advantage of maybe something like this alone. Just this move will be what I'll take advantage of. But any other move right here, I'm not interested because all these moves are just it takes high level of knowledge in the market. Yes, high level of knowledge and high level of risk because it's kind of a 50-50 trade. And me, I don't like taking trades that are 50-50. I like to be very certain on a trade so that at least my psychology will be in check. I don't place trade and my mind will be like will be skipping every time. So, but let's just do justice to gold. Now, basically, when we go down or when we go back to our higher time frame, our Google map, we will see that gold has been bullish for the longest. Now, I have been expecting gold to come back to this level for the longest. Yes, I've been expecting gold to come back to this level for a very long time. And gold has just refused to come back. And I don't blame gold. Yes, I don't blame gold because it has to fulfill technical levels. So let me go to the monthly so that we'll see the reason why it has not obviously come back to test that level. So I think it should be this low if I'm not mistaken. Uh, should it be this? Yes, thank you. Now, how did I come about this 2500 where I put this red bar right here? And that is the level I'm expecting the market to tap into before it pulls back. Now, we all know that there's what we call impulsive move, corrective move, and continuation. Now, this is just it. That's the characteristic of a trend. Now, the market pulled up here, pull back, continue the bullish movement. It pull back 50%, it retraced 50% and continue. Now, we should expect the extension to be the next 50% what? 50% extension level. That should be our first target. Now, which is what basically has happened on Go right here. The market is going all the way here to tap into this level. Now, what am I expecting? I'm expecting this market to still pull back. Once it taps into 2005, I'm expecting it to pull back towards to 2000 like this. This is what I'm expecting. Now, let me even give you one reason why I'm still anticipating that because if you take your Fibonacci, let's assume that okay, no, let's not assume. Basically, this is a swing low, swing high, swing low. Now we're expecting a swing high right here and expecting another swing low right here. Now, this is your swing low. You take a Fibonacci from swing low to what to swing high. As you can see, the market is lining up with what? The neckline. The 50% is lining up with the neckline of this inverse head and shoulder. This is you guys, this is a massive explanation right here for you guys. This is very, very crazy. Really take your time to understand this. Now, if you look at this range right here, this range that happened here, this is a, what an inverse head and shoulder right here. This is an inverse head and shoulder. Yes, I don't know how you want to see, but this is an inverse head and shoulder. And each time the market creates an inverse head and shoulder, I always expect the market to come back most of the times. I didn't say every time, but most of the time, expect the market to break out like this and then what retest it. Now, for every move that happens, hope this is a secret. I won't let it out. If you want to know more, just message me. So basically, when this move has happened like this, normally, once a bullish move has happened like this, what normally follows it is a corrective move. Now, because we don't expect the market to just be buying all the way to the upside, that is not even a healthy trend per se. Because if you still go back to past price action, you still see that the market has actually been respecting Fibonacci levels properly. As you can see, this is an example of it. That's been respecting it properly. Can you see? Has been respecting it properly, and the extension of this push to the upside, the extension of this push to the upside is still kind of lining up with this 25k. So this 25K is a very, 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 very important level. 2,500, sorry, is a very, very important level in the market. Yes, because this is what a low, this is a high. The market pull back into the retracement level, the golden zone, and then boom, all the way to the upside. Now, once the market gets to that level, I am expecting gold to sell off very, very, very crazily from that level. I expect the sell off to happen very mad, like it will be very crazy actually. So basically, the level where gold is right now, I won't be interested in trading gold. Why? Because I'm expecting reversals from this level. I will neither buy nor sell until I am very much convinced. Yes, I am very much convinced that okay, this market is tired of playing around this level, and it's either we are breaking below, we are coming back downward, or we are continuing. If the market is continuing, fine, we'll keep buying. But this level where the market is right now is just like a resistant level. Is a resistant level. Yes, and like I said, buying at or selling at resistance level is not good. Always try to make sure that market has tapped into a resistance level, played around that level, and is already going opposite direction before you want to join the trade. Don't don't always want to place the trade because oh, market is in the key level. I want to take my trade from the key level. No, allow the market to play at the key level because every key level market tend to fake out key levels. Okay, let's just take a nice example, just a little example right here. Now, initially, look at what happened here from this level. Market tapped here, tapped here, tapped here, tapped here. Those that bought at this level, thinking that this market was gonna buy, will get stopped out here. Those that sold from this level, thinking that this level was a resistant level, will still get stopped out at this level. Now this is a what? This is a pure manipulation candle. This candle right here is a pure what case of manipulation. This candle right here that popped out is a pure case of manipulation because why? Market faked out, pushed all the way up. After I pushed all the way up, came back and closed below this level, and then did as though it was gonna sell. No, it sold off and closed below this level, and then the buy, it did as if it wanted to continue selling. It now turned back and started to buy, and then it buy back to that level, dropped a shooting star candle or is it inverted hammer, and then begin to what sell. It sold all the way off. So the manipulation that happened here was so critical. You really need to look at the bigger picture to understand what was going on in this level if you're trading this market at this time. Yes. So basically, let's still um go back to what is happening currently on gold. I think for the sake of this video is becoming very long, so I think I will just take only gold and GBP USD explanation for today. For today's Forex and pipeline, this is episode 3 of Forex pipeline. Do well to turn on the notification bell, like you should subscribe and share this kind of content to your friends because this is the most realistic way to trade the market. As you can see my chart, there's no indicator. This is pure price action. Yeah, we are trading pure price action right here. So basically, the market to me is in a range. Funny enough, this is a range to me. I won't lie. This is kind of a range because the market has it has just been here and here and here for months now. It has just been here, just here. I think this is either the third month. So yeah, market has just been here. So this is just kind of like a range for me. Yes, it's kind of like a range for me. So I don't know, but this is a range for me. And I'm not basically interested in taking any trade or setup from this level because this moment we are buying, the next moment we are selling. Okay, let me break down the reason why this market bought from this level. Now, when this sale was happening, I expected this level to hold because this was the middle of the range. This was the middle of the range, and market has broken out from this middle because now in a range we have in a range market there is the high, there's the middle, and there's the low. Now this is the middle, which signifies the key level where market will respect most of the times. Before sale will happen, it has to tap into this level, and before buy will happen, it has to tap into this level. When I saw this sale, I was expecting this market to buy all the way from this level back to the upside. So this kind of market, I really don't want. I don't want a market where I'll be stressing myself trying to decipher how this is going to. I don't. It's not the matter of what can you like. It's not the matter of who have you analyze chart pass. Is the market hitting your TP? Are you making the money? That is the thing. It is not that you know how to analyze very well. You can analyze, but yet you take trade and then you hit your stop loss. That's what I don't like, and that's why I always do well to avoid ranging markets. I do because my system does not align with ranging market. So for now, nothing much to say on gold. We are still in this range. Like I said, this 2,500 is the level I'm expecting. Now, as you can see, the market has begun to react to that level, even if it has not touched it, it has begun to react to the level because you see when the market came close, it sold. Tried to pull, but it sold. It came very close to this, very very close. It sold. Now I'm still expecting the market to still fake out this level, fake it out. Like I want to see things happening here. Yes, I want to see things happening here before I'll be like, okay, yeah, this level is what is very valued. Yes, and that is why forex is 80% of waiting and 20% of execution. Because you have to just wait for the market to do the rubbish he wants to do. Then you will now use the rubbish he did to be able to take out the best out of the market. And currently right now, gold is still in this range, and I don't have anything much to say about gold. That is all about gold. Let me go to USD card. That's USD Canadian dollar. I have USD Canadian. Okay, I said I was going to talk about the JPY pairs. Oh, okay. Let me just take one JPY pairs, then or take the USD card, and then we should be done for this episode. Now, let's use GBP JPY. Now, this crash was very very crazy, very 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 crazy. Now, for traders that have not actually understood what is going on, let me just take out most of these my um levels that I drew. I can always draw them back, so I know those levels. Now, why is this market pulling back from this level? This is a strong support level. They don't even need to tell you for you to know that this is a strong support level. Apart from being a strong support level, this market is lining up with our Fibonacci. Now, this is a double confirmation. This is a double confirmation trying to tell you that this uptrend, as you can see, this market is on a very, very strong uptrend. Why did I say the market is on an uptrend? Initially, the market has been selling, 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 but now the market has come out from that sell and it has actually been trying to pull back all the way to the upside. Now, each of these purple bar you are seeing here to me are my support and resistance levels. Now, if you guys will recall on GBP USD, I said something that once the market takes out this level, I'm expecting the sales to follow up. Now, you should know that each time market takes out a very significant and key level on the higher time frame, expect a reversal to happen. It is most likely to happen. It's either the market takes out that level and pushes very well. Now, if it takes out the level with a weak momentum, it is most likely to reverse. But if it takes out the level with strength and then the market takes out the level and push all the way. Now, if it had taken out this level and pushed all the way here, I will only just expect this market to just pull back a little bit into this level right here and continue. That's what I would expect. But this was not a strong breakout. This was a weak breakout, as you can see. It broke out of the level, and it is just normal for it to pull back and gather more liquidity to continue the bullish movement. Now, the next level target, as you can see, the purple line is there already showing you. That's your Google map. You get this is the next resistance level right here. Once the market has finished whatever it's doing right here, the next level targets will be targeting is here. And crazy, crazy pips are going to be made on JPY pairs. I won't lie to you because this is what 6,800 pips. So basically, I am calling 6,800 pips, that's 6,750 pips by to the upside, or let's just say, let me just shift it like this, 5,000 pip to the upside. Yes, I'm calling GBP a buy, and I'm calling the buy 5,000 pip all the way to the upside. Yes, so you heard it here first. You heard it here first. GBP is about to shoot up to the moon. Shoot up to the moon. Yes, it is about to shoot up to the moon, and money will be made. Yes, money will be made. Money will be made. All you just want to do is wait for the market to give you more confirmation, buy and hold. Buy the trade and hold. Whatever you want to do, even if you want to be day trading, you want to be swing, anything you just want to do, just do whatever system you're using. Just have it at the back of your mind that overall GBP is bullish. Just have it at the back of your mind that whatever I do, I must know that this pair is bullish. So if you're taking a sell trade, always be conservative on your sell trade and always go trade, will I say, knock and better lots if you're trading with it for a buy. Yes, but it depends. If you're trading for a buy from a very good level and you know what you're doing in the market, use a nice lot for the buy because you are trading with the flow of the river. Yes, just imagine if the river is flowing south and you are going west, and then you are trading west and the river is going south. It will go against you because the wave is against you. But if the market is going west and you're going west with it, it will go with you freely without stress. So basically, this is a strong support level right here. As you can see, our market has reacted to it in a very, 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 very nice way. Can you see a whole weekly candle has been what changed? Like the whole transaction that happened this week has been changed. Immediately the market tapped into the support level. Now, the reason why I didn't take any trade on GBP this week was because the market had approached this level. And I was expecting this reversal to the upside. But